Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we discuss everything that's happening with the stock markets right at the opening session. This is the first trading session of this week. Of course, we've seen 4 consecutive weeks of losses for the Indian markets, and again today, markets have crashed badly right at open. The Sensex and the Nifty breaking crucial support levels down over 2% right at the opening tick. The Nifty bank slipping over 3%. The mid and the small caps also down 2.5%. A broad-based sell-off caused by the escalated Ukraine-Russia crisis, leading to higher commodity and crude oil prices now jumping to over a decade high. Crude oil prices have nearly touched $140 per barrel today and have eased off, but that has caused stir globally across equities, especially the Indian markets have slipped very, very sharply, and a sharp gap down opening has been seen. Let's look at the opening level. The Sensex was down 1,326 points or over 2.4% at 53,000 levels. It has slipped further now in the initial trading levels as well. The Nifty was down over 350 points or 2.2% at 15,888 at open and has slipped further as well. About 560 shares are seen advancing in the early action, but 1588 shares have declined. 121 shares remain unchanged at the early action. All the sectoral indices are seeing major losses in today's trading session. Talk about stocks as well. Maruti Suzuki, the worst performer on the Nifty right now, followed by Bajaj Finance, Asian Paints, Eicher Motors, and ICICI Bank. On the gaining side, you just have a handful of names: ONGC, Coal India, Hindalco, and Tata Steel. All the companies dealing with commodities at this point in time and dealing with crude oil at this point in time in focus, they are raising on the back of the rising crude oil prices, energy prices, metal prices, commodity prices are shooting at multi-year highs as well. Food prices have risen to record highs too across the world, and that's why you're seeing commodity action play out. Mid and small cap shares were trading in the negative zone. Nifty mid cap 100 slipped over 2.6% at open. Small cap shares shed about 2.4% as well. Most of the sector gauges compiled by the NSE were trading in the red. Autos and banks underperforming the index by a falling almost by 4.4% each. This is as far as the auto index and the banking index is concerned. Of course, talk about the metal index that has moved higher by almost 0.5% in today's trading session. Barring metals, you have everything in the red right now. Look at what the crude oil prices are trading at. Crude oil prices were trading at a decade high, almost touched $140 a barrel, came back, of course. Markets are trading making higher highs here. There are important statements from Bank of America saying that a loss of Russian 5 million barrels per day of crude can lead to $200 per barrel coming in a jiffy as well. So keep in mind that JP Morgan has said that crude prices may soar to $185 a barrel, and gold prices have surged to a 19-month high. It has crossed over $2,000 per ounce at this point in time. Of course, why is the crude oil price at such a high level, at a decade high? And why is it touching near $140 a barrel? There is a risk of US and allies ban on the oil and gas from Russia. There could be a delay in the Iran nuclear deal talks. Reports that North Atlantic Treaty Organization or NATO members have now given a go ahead to send fighter jets to Ukraine does not sound good at all. There has been a reaction coming across commodity markets because of that as well. A very, very bad start to Indian markets in today's trading session. Of course, this follows after a dismal week that we have seen when the markets had shed 2.5% on the worsening Russia Ukraine war and concerns of pushing the oil prices over supply concerns. Remember, today is the 7th of March when the elections get over, and today or by today evening or tomorrow, you may see domestic fuel prices of petrol and diesel shoot higher because they have been unchanged for over 100 days now because of the elections. We have been talking about this right from the very start, that this is only a temporary blip. When the crude oil prices are rising, there cannot be for a long time that OMCs don't raise prices. So far today in the morning, no change happened. But today or tomorrow morning, you may see that shocker coming up. So brace up for that. Petrol, diesel prices may be in for a big, big shock on the upside as well. This is exactly a big reason why auto stocks are really falling at this point in time. Of course, after the dismal sales data of February, we may see additional concerns coming in the way of auto stocks as speed breakers. Higher oil prices deter people from going ahead and buying vehicles at this point in time. Keep an eye out on that as well. The market's direction would be heavily influenced by the ongoing geopolitical tensions for this entire week as well. On the macro front, of course, crude oil prices are definitely important to track. What kind of an impact could this have on the different sectors of India economy, and how does it overall impact the investor sentiment? That's going to be the focus of our business today's coverage today. We'll keep getting you the top voices to be able to understand the impact on your daily lives, on your wallet, because of this crude oil prices rise, and how much of it should be a worry for you, and will it be just a temporary blip or a concern or not? All of those things will be coming up, so you need to stay tuned with us throughout this day today. Of course, FII sell-off has been a big concern as well. FII sold shares worth over 22,500 crore rupees, while DIIs bought shares worth over 16,740 crore rupees in the week gone by. And FIIs have been net sellers from October for consecutive months in the running as well. Keep an eye out on the airline stocks. They may be worst hit. All the sectors which have an input cost related to crude oil prices like FMCGs, cement, paints, all of this will be in focus, will be showing some negative reaction. Oil majors upstream like ONGC or an Oil India, they may see some bump up because of the crude oil prices here. Talk about the FMCG stocks. The rising inflation and raw material prices will have an impact on FMCG firms as well. Talk about Bajaj Finance. Jefferies has come out with a report here. The brokerage firm has initiated coverage on Bajaj Finance shares with a neutral rating and target price of 7,200. Jefferies sees the company sustaining high growth and believes valuations are at a significant premium to the lenders and its past average. Keep an eye out on that stock. However, all the stocks are actually under the negative influence of the overall market as well today. Titan could be in focus. Macquarie has come out with a report here. Brokerage House believes that the earnings outlook for jewelry company is healthy owing to the strength in demand. Macquarie has also added the stock to its marquee list and believes the company should benefit from the continued momentum in the markets as well. Macquarie has also come out with a report on Asian Paints. Considering the margin concerns in the near term, it has removed paint maker stock from its marquee buy list. It has also cut the EPS estimates right here for Asian Paints by 1% for FY22. CLSA has come out with a report on Dr. Reddy's. It believes that even though the brokerage firm has a buy rating on the stock, it has trimmed the Russia-Ukraine sales estimate by 11 to 34% for FY22 to FY24. Additionally, it has also cut the EPS estimates for Dr. Reddy's by 3 to 9% for FY23. So keep in mind all of these stocks as well. But overall, stock markets are under the influence of the rising high energy prices and commodity prices, leading to an impact on various segments of the markets, and of course raising the concerns of stagflation right now, where growth is getting stagnant but inflation is getting higher. That again also will be our focus today. To understand what this stagflation really means in detail, we will get you some videos also going, so do stay with us onto Business Today. Don't forget to subscribe to our YouTube channel if you want to stay updated with what's really buzzing on the street and how our stock market's going to chart this sharp rise in crude oil prices. Thanks a lot for tuning in for now.